Good morning, everyone, and welcome to episode 30 of Builders Talk. So over the last couple of weeks, I think the last 3 weeks, I've been talking about what changes we can make that will put our business in a better position. And I've been talking about the precursors that lead to business failure and what we can do to minimize the impacts and detect changes early enough to make adequate changes in our business. And ASICS had nominated the top 5 causes of business failure in Australia, which are inadequate cash flow, poor strategic management, trading losses, poor financial control, and undercapitalisation. And today I'll be talking about poor financial control. If you don't have control of your finances, you don't have control of your business, and your business will control you. So business owners often assume that their accountants is looking after their business financially, and they will regularly provide you with, regular and relevant advice. But unfortunately, this is not their job, it's yours. And I often see, in Facebook groups, people saying that their accountant is not doing what they expect them to, and you need to clarify with your accountant what their function is and how they help your business. Because we as business owners are the only ones that know what is currently happening in our business. Our accountant isn't there every day in our business. They don't know what's happening in their business. They don't know what jobs you're working on or what jobs will be coming into your pipeline in the near future. So they're not really the ones that can give you the advice and give you the knowledge that you need to financially look after your business. And you need to implement and keep key metrics and keep an eye on those type of things so that you are aware of where your business is at any time or any week or any day. So financial reports are the only way that this can happen. But with financial reports, most of this reporting is what has happened in the past, and it's something that we can't change. So, they help us, look at how our projects are going, but we can't change how that project has gone prior to looking at the report. So what I'm referring to here is, you'll look at your project, you'll have a project budget and you might have your actuals and you compare them. But these are bills that have already come into your business. You've already incurred that expense. So you can't really change that. You might be able to go back to a supplier if they quoted you, for instance, the windows were $10,000 and the supplier has now invoiced you $12,000. You might be able to go back and say, hang on a minute, you quoted me $10,000. Now, why are you charging me $12,000? And it might be whatever, prices have gone up or there was a window miss and something had to be added. But you can't, these financial reports that we get are all done after the fact, and we can't change that fact. So you really need to be able to have that ability to see what's coming in before you pay it. So you can, one, check with that supplier why they've charged you more than they may have quoted you before. And you can see what's coming into your business prior to that. And those things can't be depicted by an accountant. The accountant is really there to, go through all your figures, do all your tax reporting, and keep you compliant with what you have to do for your business in relation to the tax office. But they're not necessarily there to give you day-to-day reporting and day-to-day advice on how you should be running your business. You probably can set that up with your accountant, but unless you have that conversation, they're not going to give you that information. So the profit and loss shows your income in, it shows your expenses out, but once again, those transactions have occurred. We need to ensure that our financial accounts are regularly updated. And I like my invoices put in daily, so I can run reports, and every day I can pick up if there are going to be any cash flow issues that I might need to deal with. I can see exactly what bills are due at the end of the month, and I can see in advance what amount of money I'll need to pay those bills that I have incurred. So this gives me the ability to act, in enough time to bring in more money to cover those expenses. I can let the builder know, I need him to get X job to the next milestone to cover the accounts that are for that project. Your accountant will only act on what information you have provided and what questions you'll ask of them. So if you're not updating your accounting system regularly, daily, weekly, whatever it may be, you won't be able to see those things occurring, and you won't be able to act quick enough to mitigate some of those financial problems. You can't tell till the end of the financial, you can't wait until the end of the financial year when your accountant gives you the figures and realize that you are trading at a loss. Setting up and understanding the reports that you can get from your accounting system is one of the most important aspects of owning your own business. When we first start our business, we may just set up a basic version of an accounting system such as MYOB or Xero. And in the building industry, it's really important for us to understand where we are losing or making money. And I'm referring to each individual area of the business and not the usual area of the businesses that most, business coaches or business models break businesses down into, such as a marketing department or a customer service area, admin, human resources. These areas are defined as overhead, departments that our businesses may incur. But if you look at your profit and loss, your accountant will typically give you a breakdown of those type of areas. How much money you spend on marketing, how much money you spend on, employees, how much money you spend on petrol. But these categories don't really give you the in-depth information that you need to successfully run a building company. So when I set up my accounting system and my accountant thought I was being too detailed and I was just overdoing it, and she said that I didn't need the information, and was probably because I was just making her job harder. But I can look at my accounts and see exactly what department is going bad. So when I'm saying what department, I'm more or less breaking it down into, the accounts into labor and materials. And then I break them down even further, and I break them down into labor for the trades and relevant materials for each trade. So I can find out in seconds if I've gone over budget, for example, for the window supply for a project. I can find out if I've gone over budget for the tile supply or the tiling labor. And this gives me the ability to, if I see a pattern that we're regularly going over, our window supply budget, I might need to add a little bit more to my next project to ensure that we don't keep going over in that specific department as such. So a lot of people don't have that. They just lump everything into one, big category of cost of goods sold, but they can't then, break it down and itemize and look at exactly where that money is going to. So I've even then broken down my reports into sections that relate to progress claims, such as the base, frame, enclosed, fixing, and final. So I can actually look at each of those areas and see, okay, for the base stage of that project, am I on track? So it's sort of a higher level view. So if I just wanted to quickly have a look and go, am I tracking for that job? I've got that snapshot there. So Larissa's joined us again this morning, and she's saying monitoring money movement daily is important and requires discipline. Yeah, and every day I don't necessarily look at reports. I definitely put our invoices in regularly, but looking at that snapshot and understanding what costs you've got coming up so that you know that you've got that money there for it is really important. So I know that I can get an overview of each stage of that project, and setting this up took me a lot of time, but it really gives me a clear snapshot at any time in any project of how that job's going and how our business in general is going. So this allows me to take that action before things get a bit dicey. So a cash flow report that we've developed also allows me to see what projected income will be coming in the future. Again, as all our accounting is done in the past, we need to be able to forecast what money is coming into our pipeline. And this allows you to identify gaps in the workflow in advance. And we all know that it can take months and even years for some clients to decide to work with us. So being able to project what is coming into your business in the future will not leave you in a place of panic when you put your head up from doing all the work and realize that you haven't got anything coming into your business in the future. We get busy and we often forget about bringing more clients into our business. So we always need to keep marketing. And I'm not the best at this in our business, as we're busy and I have forecasted we have income coming in for the next year, but we still need to be visible in the marketplace or people forget about you. At the moment, builders are reluctant to quote jobs from the fear of not making money. Prices are going up every month and significantly, anywhere between 5 to even 25% in any one month. But what will happen in 6 months' time when you don't have any forecasted work in your pipeline? So we need to keep quoting, and we need to have some mitigation procedures in place to limit our losses. So most suppliers, I guess, give us a few months' notice of increases. So make sure you're updating your quoting programs when these come in. Make sure you have an expiry date in your quotes, e.g. this is valid for 30 days. So this gives you the ability to re-quote if the client takes longer than the 30 days to decide to move forward with you. Add a bigger contingency to your projects for any increases after you've signed clients up. There is the ability to use cost plus contracts or add more provisional sums and prime costs into your contract to limit your exposure to the current price increases. But look at what works best for your business. Get some advice if you need to know, if you don't normally use cost plus contracts, or you don't normally put a lot of provisional sums or prime costs into your business model, make sure that you're aware of the pros and cons of those types of things. A cost plus contract, yes, the client pays for everything that you bill them for, but often it definitely is a lot harder to administer. And if you were trying to do cost plus contracts on quite a few projects at a time, it'd be a bit of a nightmare for your admin staff to keep that all up to date and all in check, and making sure that you are actually billing the client for all the things that are happening within their job, that are happening over all of the jobs. So it is a balancing act between the banks, what the banks will accept. If your client is getting a bank loan, a lot of them won't accept cost plus contracts, and they often won't accept too many provisional sums or prime costs in a contract. The bank is protecting their asset, which is the home that you're building, and they want to ensure that they aren't left with significant increases in the contract price. So other factors that may impact the financial management of your business can be locking up your money in assets, such as I spoke about last week, is car leasing. So some builders fall into the trap of buying big setups, expensive cars, massive trailers, and buying all the best tools. But make sure you stay modest in this regard and buy what you need. And I'm not saying don't get an expensive car. If you can afford it, then yeah, go for it. But make sure you're financially stable and have sufficient capital and cash flow and forecasted cash flow for these expenses that you are bringing into your business. When we started building business, a lot of carpenters just decide they don't want to work for anyone anymore, and they start their own business, and they have very little working capital. But we do need to have that working capital to ensure that we can carry the expenses while we are waiting for a client's progress payments to come in. You can get access to things such as overdrafts or revolving line of credit. And a lot of people go and put, I guess, a revolving line of credit over their own home as security, which, is that something you really want to do? You want to build a buffer up in your business. Instead of buying those expensive cars, leave that money in your business and have a buffer to make sure that you're not putting, for example, your home and your family home at risk. There are companies that will do, I don't know if you've heard of invoice factoring or invoice finance. So there's companies that for a fee will provide you with the cash relating to the invoices that you may be waiting for clients to pay. But some of these options are really a last resort. And I know me as a business owner, when I've seen other suppliers or tradies or that come and I know that they're using invoice factoring or invoice financing, it's a big red flag for me, because I feel like they're having cash flow issues in that business. Is this someone that I do want to do work with? Am I going to be potentially losing my money? I know there was a kitchen manufacturer that had this happening, and they did end up going bankrupt. And was I prepared to, give my work to that client, knowing that potentially at some stage, I might have paid them a deposit for a kitchen and I don't end up with that kitchen? So you want to have a look at what is available to you if you are needing to have some sort of finance for cash flow in your business. But the best way is to have the cash in your business. Leave some cash in your business instead of taking it all out and spending it. Or like I spoke about last week as well, I don't want to pay the tax man any money. Let's go and buy stuff. Is that wise? Is that really what your business needs? Or do you just need to leave that capital within that business? So another factor that can affect the financial management is low productivity. This is happening now. We're experiencing material shortages, which is slowing our project timelines down, which in turn slows the cash flow into our business as we're not getting into our milestone payments as quickly as we normally would. And I've spoken about supervisors before, how much they cost our business to employ one, but not only do they cost us in the overhead amount, they can also cost us in lower productivity. No one will push your trades and your employees more than the business owner. A supervisor will not get projects to the next progress payment stage as quickly as you as the owner would. So initially, if you go down the route of taking on a supervisor, you may say a loss of productivity. And if you're not seeing this, as it's happening, it can affect your cash flow and your business's viability. So these are some of the issues that building businesses experience, and I address these in my program and provide you with the tools and the resources to limit these events from occurring in your business. So keep an eye out for my impending release of my new programs that are as custom as the homes you build and will be suited to each stage of business growth. So Larissa's got a few more questions. Yes, a snapshot gives me more understanding of what is going on. And the mentality of spending money instead of paying tax is a deadly policy for businesses. Yeah, so a lot of people, they just see this money and they don't want to pay tax. They don't want to lose 27% of that money that they've got to pay tax. But if there's just no use spending money on things that you don't really need in your business to save that 27%. So, don't get caught in this trap of just thinking, oh, well, I've got money in my business, I'm going to have to pay tax, so I'll just go and spend some money, because you don't get all that money back. So until next week, keep powering your business, and I'll see you then.